Wonderful. Thanks, Marina. Well, good morning, everyone. And as Marina mentioned, my name is Gordon Holley, and I'm the President and CEO of Humanity Financial Management. As a CPA CA for almost 25 years now, I love helping individuals and organizations that are trying to make the world a better place. And as you might be able to tell from our name, we work primarily with not-for-profit organizations, charities, and social enterprises. And just for simplicity, and for the rest of this presentation, I'm going to refer to all three of these as nonprofit organizations. In my role at Humanity Financial, I often see stress and anxiety produced by finances and financial reporting in many nonprofit organizations. So we built our company to provide financial oversight to mid-sized nonprofits to help them better manage their internal financials and their financial budgeting and reporting. Ultimately, our company works to instill confidence and credibility in organizations by streamlining their internal financial management so they can focus their energies on their programs and the people they serve. Now, we chose to work in the not-for-profit sector because we believe that not only were there some of the biggest opportunities for improvement, but also because we really like working with the people in the sector. Most are really passionate about their causes and the great work that they do. And life is too short not to feel like you're making a meaningful contribution and working with people that you really enjoy. And we love that we can leverage our financial expertise to make a meaningful contribution to people and organizations that are trying to make the world a better place. And we find inspiration from the individuals who work tirelessly for their causes. Now, many people think that working with numbers is dry and boring, and I get that. But I ultimately work with people, and I love it when I can make their lives a little easier and a little less stressful. And working with numbers allows me to do that, and I love it. So at our firm, we're set up to work remotely, so we literally have clients all over Canada. A typical client for us would have revenue between, I don't know, 500,000 and about 5 million. So we fit best with organizations who need a little more than a bookkeeper, but aren't large enough to require a full-time professional accountant. And so while we don't work with many smaller organizations, most of what we've learned is just as applicable to them as to their larger colleagues. Now, I've been on the boards of about 10 small to mid-sized organizations over the last 20 years, mostly as treasurer, and I'm currently on the board of 4 small to mid-sized nonprofits. Now, one of the boards that I'm currently on is Vantage Point in Vancouver, and I also facilitate much of their training workshops on financial essentials for not-for-profit organizations. And in addition to our training today, we also offer a 2 to 3 day financial management training program called the Certified Nonprofit Accounting Professional Program. And so that's about it for me. Let's dig into the presentation. So many small to mid-sized nonprofits struggle financially. Either they have difficulty raising the funds they need to achieve their missions, or they experience organizational anxiety because they're not sure if they're managing and spending their money appropriately to get the biggest bang for the buck. And many take on excess financial risk because they don't have the internal financial expertise and confidence that their financial reporting is accurate and complete, or that they're in compliance with the Canada Revenue Agency. Now, all of these issues can be resolved. If boards are clear about what they want, it's generally possible to get there. So you ask, what can we do to raise the money we need to achieve our mission and manage and spend our money appropriately to maximize our impact? Well, that's a great question, and one that we'll spend the next 50 minutes trying to give you some answers to. As I mentioned in the introduction, we work primarily with nonprofits on their internal financial management. We've seen many organizations struggle with these issues, and many have been able to overcome them. There's a great article on knowhownonprofit.org excuse me, that sets out 4 components of really good financial management. And not only do we like their framework, but we found over time that working with our nonprofit and charity clients that this framework clearly identifies the 4 key things that organizations need to do for financial success, particularly in small to mid-sized nonprofits. And these are on the slide here. So a clear financial strategy, a plan for generating income, a robust budgeting and reporting system, and an accountable internal environment. Organizations that do well in each of these areas are more financially successful and sustainable than those that aren't. By building their internal financial systems and processes, they instill confidence and build credibility with key stakeholders. We're going to spend our time together today reviewing some of the financial challenges that many organizations face, and I'll give you some takeaway ideas about the types of things you can do to make your organization more financially successful. And just to make it easy for everyone, I've included a brief description of some of the challenges that organizations face on the first slide for each topic, and I've provided a quick checklist at the end of each section that you can use to identify areas that you'd like to work on at your organization. Now, before we get into the meat of the presentation, though, I want to give you a brief financial and staffing overview of the nonprofit sector in Canada, just so you have some context. Now, some of these figures are from the early 2000s, but I'm not aware of any more recent figures. So Canada has the second largest not-for-profit sector in the world. The Netherlands is the largest, and the United States, our neighbor to the south, is the fifth largest. Now, the main reason that ours is much larger than the US is because ours includes hospitals, universities, and colleges, whereas most of their healthcare and education is private. So this actually makes some sense. There are an estimated 170,000 nonprofits in Canada, roughly half of which are, strictly speaking, not-for-profit organizations, and the other half of which are charities. And the sector represents about 106 billion, or 8.1% of our GDP. That's almost 10% of our overall economy. As an employer, about 2 million Canadians are employed in the non-for-profit sector, and about 13 million Canadians volunteer annually, which is almost half the population aged 15 and over. And these volunteers provide over 2.1 billion volunteer hours, excuse me, translating into another 1.1 million full-time jobs. Sorry, I'm just going to grab some water here. Okay, much better. And if you include both paid and volunteer labor, the nonprofit sector as a whole employed over 14% of our workforce. The core sector, which excludes hospitals, universities, and colleges, employed 9%, more than construction and agriculture combined. Now let's look specifically at paid staffing. If you don't have any paid staff in your organization, you're not alone. Over 60% of not-for-profit organizations have no staff, and over 40% of charities have no staff. Now this means that for many small organizations, everything I recommend today, if you decide to implement it, will need to be done by the board or by contractors you hire for specific expertise. That's unlikely you'll have full-time staff to delegate to. Now let's look at finances. This chart is from a national study released in 2005. And if you look at the light blue bars in this graph, which show the total percentage of organizations, you'll see that in 2003, which again is the most recent year for which I've been able to get figures, over 40% of nonprofit organizations in Canada had under $30,000 in revenue. Another 20% had under $100,000 in revenue. So over 85% of organizations had under $500,000 in revenue. And if you look at the yellow bars, which shows the percentage of total revenue that went to those organizations, you'll see that in the same year, almost 60% of all revenue in the sector went to the largest organizations in the country with over $10 million in revenue. Another 25% went to organizations with over $1 million in revenue. Again, over 85% of the revenue went to less than 10% of the organizations. I guess it really does pay to be bigger. Now keep in mind that these figures are for the sector as a whole, and they include hospitals, universities, and colleges, so the results aren't all that surprising. Now this graph is from the same national study, and these slides show that the revenue from 1997 to 2005 show, well again, the most recent period for which I've been able to find data. The first column in the slide shows the revenue sources specifically for hospitals, universities, and colleges. And the second column is for the rest of the nonprofit sector, which is referred to as the core nonprofit sector. And if you look at the dark blue sections, you can see that government funds over 70% of hospitals, universities, and colleges, but less than 20% of the rest of the sector. In the core sector, the primary source of funds, shown in light blue, is from the sale of goods and services, which accounts for over 45% of all funding for the core sector. Transfers from households, shown in gold, account for only 11%. That was about $10.6 billion in 2010 in the core nonprofit sector. I don't know about you, but I found that a bit surprising. I always had this picture that most of the funding from the sector was from private people making donations. So now that you have some context, let's move on. Now before we dive into the four keys, let's just step back a bit and talk about the underlying philosophy of this presentation. And you'll see this philosophy embedded in all of our recommendations. Based on our experience with our clients, financial success in the not-for-profit sector is all about risk reduction and building trust, confidence, and credibility. And this is often difficult for small organizations. I mean, everyone has reputations to protect. Funders want to reduce the risk of ineffective grants. They typically want to grant or donate to larger organizations with more credibility and established systems and track records of delivering impact. Board members, staff, and volunteers want to be associated with well-run, solid organizations. So how do you reduce risk and build trust and credibility? Well, frankly, you use the same tools as the big boys and girls use, only on a smaller scale. So you plan well and manage your resources effectively. You demonstrate the alignment of your resources and efforts with expected outcomes. You need to measure and be able to demonstrate your outputs, outcomes, and impact. But most of all, you need to build internal systems and processes that reduce risk and increase the likelihood of positive outcomes. So give all your stakeholders reasons to trust you. Be able to demonstrate that you're going to be able to raise enough money to be successful and that you're going to be able to manage and invest that money effectively to achieve your mission. You'll want to make sure that you have access to sufficient financial and fundraising expertise. And this is not generally true at many small organizations today. And you'll see our recommendations will include getting access either on a volunteer or a contract basis to professional accountants and fundraisers. This isn't a marketing pitch. Most of the organizations on the call today aren't in our target market. But based on our experience, this is one of the most important things organizations can do to improve their financial success. So with that background, let's get started. Well, actually, let's do our first poll question now, Marina.
Great. So I'm just going to launch this poll here, and our first poll question is, do you have a professional accountant, for example, a CPA, CA, CGA, or CMA on your board of directors? So you can go ahead and vote right on your screen. Just click the yes or no button. And looks like we've got most people voting here. I'm just going to give it another couple of seconds. Great. Okay, so I'm just going to close and share the poll so everyone can see the results. And it looks like a pretty even split, Gordon. We have 55% say yes and 45% say no.
Wow, that's actually pretty good. I'm pleasantly surprised that many organizations have professional accountants on their board. And there's been no other survey that I'm available that gives us that data, so that's really good to hear.
Great.
Okay, thanks, Marina. Now, the first key for financial success is to have a clear financial strategy. Now, when we talk about having a clear financial strategy, the problem we're trying to solve is that many organizations don't invest their financial resources in the way they need to in order to have the biggest bang for the buck. So we're looking for laser focus here, bringing all of the resources of the organization to bear on a few specific high priority goals. In order to do this, you really need all of the following: a clear vision statement and mission statement, a long-range strategic plan, typically 3 to 5 years, and an operating plan and integrated financial budget that clearly supports the achievement of the most important goals outlined in the plan. Now, this may sound like a lot of writing and paperwork, but it's really not. For smaller organizations, you should be able to do all of this on about 3 to 5 pages. Now, the reason you need a clear financial strategy is that funders and donors need to be convinced that you've done all of these 3 following things. Number 1, you've aligned your planned spending and personnel with the outputs and outcomes and impact that you plan to have. 2, you've allocated your resources to achieve your mission as effectively as possible. And 3, you've designed your planned courses of actions so that they result in maximum impact. Regardless of your cause, you really need to be able to demonstrate that you'll spend their money as well or better as they would have been able to do. And you're supposed to be the experts in your area. You're closest to the customer and the people you serve. So being able to demonstrate a clear financial strategy really sets you up for success. And I thought this picture of the hammer and nail was perfect to demonstrate the concepts here. You need to align the hammer with the nail. You need to hit it hard and drive impact. And if it's done right, it's very effective. But if your alignment's off, you can miss the nail completely or just get a partial hit. And that's a pretty good picture to keep in mind as we're talking about a clear financial strategy. So you can see at the top of this slide that a good strategic plan would include your recently reviewed and updated vision, mission, and values. It would also include your long-range priorities and the strategies that you expect to use to achieve them. The annual operating plan should identify a limited number of specific SMART goals, and by SMART we mean specific, measurable, attainable, realistic, and time-bound. So you need a specific number of SMART goals to be achieved during the next fiscal year. And at the bottom of the slide, you'll see what we think is the really important part and is often missed. You'll see that you need to align your financial resources and your people resources with your individual goals. Also, it really helps if all aspects of your strategic plan and operating plan are connected to your mission, evoke strong emotional responses and engagement from your intended audiences, and are really in alignment with the stories your organization tells about what it does. If you ever submit a grant or funding proposal, this alignment between the stories that you tell and your budget is absolutely critical. And this is the critical role for the board, aligning the financial budget and the people resources with the most important priorities of the organization. It's really an investment plan. Where do we have to invest our money and our people to most effectively meet our goals for the year? And just in case you haven't seen this before, here's a template for a typical strategic plan. It doesn't have to be long and complicated. It does, however, require some thought, and it does require board consensus. And you can add pictures and logos and graphics if you'd like, but the plan itself is pretty simple. Believe it or not, long and complex is easy. Short and simple is very hard. It takes time to distill long and complex into short and simple, but short and simple is much easier to communicate to your stakeholders. Now, ideally, your strategic plan should be no more than 1 page with a vision, mission, and 3 to 5 long-range priorities, and up to 3 strategies per priority. We like to update our 3-year strategic plans annually, so after the first year, we take off all the strategies that we achieved during the past year, and we add new strategies for the 3rd year. We also review and update our vision and mission statements annually, and at the same time to make sure that they continue to be relevant and clear. Sometimes internal or external circumstances change that require changing your vision, mission, and priorities. And here's a template for an annual operating plan. Again, it doesn't have to be complex, but the more you put into this step, the more likely you are to actually achieve your goals. It's fairly easy to create this document or this framework for your organization in Microsoft Excel or Word or a similar program. Excuse me. And if the strategic plan answers the question, what are we going to do? The operating plan answers the question, how are we going to do it? So you go through your 3-year strategic plan and you allocate your goals on a 3-year timeline. Some in year 1, some in year 2, some in year 3, usually based on budget and staffing constraints. As much as we'd all like to achieve all of our goals in the first year, it's not usually possible. And once you've identified the goals that you hope to achieve in the first year, then you prepare an annual operating plan and integrated budget using a format similar to the above. The annual operating plan should be no more than 3 to 5 pages, maybe 1 page long for each long-range priority. So you might have action plans for 3 to 4 strategies on each page. And for each of the strategies on your strategic plan, we had 12 in our sample, 4 priorities, each with 3 strategies. You identify which individual action steps need to be taken to achieve that goal. And then you figure out who's going to do or be responsible for each action step and add in any revenue you expect to earn on that project and project all of the expenses that you expect to incur. And this is what formulates the basis for your expense budget for the year. So this is the tie-in between the budget and the operating plan. And you need to figure out how much in the way of staff resources you need. You want to include specific names and how many hours or what percentage of each full-time equivalent FTE it will take to achieve your goal in the year. And you have to make sure you don't over-budget any particular staff member. You'll want to spend some time figuring out what the outputs or deliverables of the project are and what your measures of success will be. Add a start date and an end date, and you're just about ready to go. The last 2 columns are a status column where you can do something simple like a green, yellow, or red light for something easy for you to visually see the status of your projects and to be able to identify which ones are not on time and on budget. And finally, a comments field for any comments that are relevant either at the beginning or as you progress in the project. And so this is really a summary of this section on clear financial strategy. Define the impact that you want to have, create goals and action plans to achieve maximum impact, invest resources for maximum impact, and now invest according to the importance and complexity of each goal. And this is really key. Often organizations don't align their spending budget with their key priorities. They end up investing in things that aren't going to get them their maximum impact. And then evaluate your progress. I also note here that you really should consider whether you're investing enough in your organizational capacity to maintain or improve your ability to function. We usually have at least 1 main priority each year to sustain and build our internal capacity. And if you don't do this for a few years, you can start to lose organizational sustainability. This is a problem for many organizations. They underinvest in their own internal capacity, and they end up becoming ineffective and inefficient. So here's the first quick checklist I mentioned at the beginning of the presentation. After the presentation, you might want to go through the slides, print off these 4 checklists, and complete them for your organization. It'll give you a sense of which areas of financial management should be priority items in for your organization, and which items you should focus on your time and energy on. So first, review and update your vision, mission, and values. 2, create and update your one-page strategic plan. Create or update your 3 to 5 page operating plan with SMART goals, with each goal supported by an appropriate financial budget and people resources. Align your spending with top priorities to maximize your impact, and invest wisely to ensure appropriate financial budget is allocated to the most important goals that allow you to have the most impact. Okay, so that's the end of our section 1, a clear financial strategy. Marina, can we go ahead with poll question number 2, please?
Absolutely. So which bookkeeping and accounting package do you use? So we've got QuickBooks Desktop, Sage 50 Desktop, Excel, another online program, or other. And if you want to go ahead and vote on your screen, we'll get a sense of where everybody's at with that. Great. So let me just share that for everyone. So it looks like most people are using QuickBooks. We have 42% with that, 18% Sage 50, 14% Excel, 8% an online program, and 19% other.
Wow, interesting. I'll share with you later on in the presentation some statistics that we've got for national. And it'll give you a sense of how this particular group compares to what's going on nationally. But that's great. Let's continue on with our next section, a plan for generating revenue. So now that we've got a clear financial strategy, we need a plan for generating revenue. And the problem we're trying to solve here is that many organizations don't have an effective fundraising or fund development plan in place. And as a result, they struggle to obtain funding required to effectively achieve their mission. And they often lack the specific fundraising expertise and experience, and as a result have far too few funds to make a serious dent in their mission. And this is where we have to put our big boy and big girl pants on, because for most of us, fundraising is well outside our prior experience and our comfort zone. I think it was Benjamin Franklin who said, if you fail to plan, you plan to fail. And when it comes to fundraising and fund development, funders and donors want to see that you have an effective plan in place to raise the money you need to achieve your mission and to be financially sustainable. They don't want to contribute to organizations who are going to be out of business. Now, for most of us, fundraising is hard. We're not accustomed or trained to ask people for money. But I once saw a diagram that essentially showed that asking for people for money is typically the last 5% of the process. The point was that 95% of fundraising is networking and relationship development and donor engagement, all things that we can do. It's very similar to planting a tree. We know it's not going to be a full-grown tree for 20 years, but if we don't start now, we'll never have a tree. So we buy the seeds, we plant the seeds, we water them, we make sure the tree gets enough sunlight and nutrition, and eventually the tree becomes fully grown and begins to bear fruit. Fundraising is a very similar process. We need to identify the likely funders and donors, cultivate relationships, build trust, and ultimately ask for money. So in this section, I want to explain the difference between fundraising and fund development. We'll talk about the need to identify the most appropriate funding sources and the most appropriate funding activities for your organization, and we'll also make the case that most organizations would be well served to obtain the services of a professional fundraiser or grant writer. Okay, so fundraising is an activity that's conducted with the intention of raising money for a not-for-profit organization or charity. It's operational, it's short-term, and it's transaction-based. Fund development, on the other hand, is a plan that develops reliable, diversified sources of income for long-term sustainability and the realization of vision and mission. It's strategic, it's long-term, and it's relationship-based. In addition to conducting specific fundraising activities, most organizations would be well served to create a thorough fund development plan. A professional fundraiser or grant writer may be able to identify ways to get access to additional funding that you hadn't thought of. They may also be able to identify easier ways to get the funding you need. So the first step in building your funding plan is to identify the most appropriate funding sources for your organization. And you can see some of the options here. And remember that 45% of revenues across the core sector come from income earned from the sale of goods and services. Again, professional fundraisers can help you identify funding sources that you may not have considered. Now this matrix I thought was absolutely brilliant. It was developed by Scott Decksheimer and Centerpoint, and it's called the Linkage, Ability, and Interest Matrix. And this matrix is one of the most useful tools I've ever seen for fundraising. Once you have identified the most appropriate funding sources, you get your team, which can either be a fundraising committee or your board, to brainstorm around who could potentially be on the list and then you rank everyone on the list according to their linkage to the organization, their ability to pay, and their level of interest. And when you're done, you essentially end up with a prioritized list of people and organizations to follow up with. Okay, so now we know who we're going after. Now we have to determine the most appropriate fundraising activities for our organization. And much of this will depend on who you identified as the most appropriate funders and donors in the previous step. You may choose one or many of the activities in this slide or others. Picking the right ones for your organization is crucial because most organizations invest significant time and money in their fundraising activities. If you pick the wrong activities for your organization, your fundraising will not be as effective as it could be. Again, this is an area where a professional fundraiser can really be of incredible assistance. Now, many organizations are able to raise funds for programs, but struggle to raise money to cover their overheads. And if you've ever struggled with this, you really owe it to yourself to learn about the overhead myth. If you get a chance to watch Dan Pallotta's TED Talk, The Way We Think About Charity is Dead Wrong. It's about 20 minutes, and it's a great overview of the issue. Most funders want to provide restricted funding because they mistakenly see that funds going directly to programs and the people you serve as positive, and they see overhead and administrative expenses as a waste of good money. And virtually all of the research that's been done to date says that this just isn't true. Because of this misperception, however, many organizations have been systemically underfunding their internal capacity building and are effectively undermining their future growth potential. If you haven't heard of the overhead myth, you need to understand it. It's what prevents many organizations from getting the funding they need to effectively achieve their missions. And according to GEO, or the Grant Makers for Effective Organizations, the types of funding that organizations need most are unrestricted funds, multi-year grants, and fewer bigger grants. If you figured out how to get this kind of funding, you're ahead of the game. But for everyone else, learn more about this issue and learn to discuss it intelligently with your funders. Now, hiring staff is very expensive. Another approach is to take advantage of all the baby boomers who are out there retiring and looking for opportunities to make a meaningful contribution. Rather than trying to raise money to hire additional staff, consider relying more on volunteers. So consider engaging your first volunteer as a volunteer coordinator. If you're interested in this but don't know where to start, buy a book called The Abundant Not-for-Profit. It's published by Vantage Point, and it provides a whole framework for finding and managing a volunteer workforce. Now, as I mentioned at the beginning of the presentation, not everyone has the skills required to be effective fundraisers. But there are a huge number of professionals out there who do this for a living. They have access to funder databases so they can research funders and what they like to fund and connect your organization with the most likely funders. And this can significantly improve your fundraising success. They're often great relationship builders, so they know how to work effectively with prospective funders and donors. So almost every organization should at least get some one-time assistance from a professional. They can point you in the right direction and let you know if there are easier ways to get more money. If you can't afford to hire one, try finding one willing to join your board or your fundraising committee as a volunteer. In case you're wondering where to find them, you can meet them if you attend any one of their conferences or events. You can also get referrals from other organizations. So here's our next checklist. Do you need fundraising or a fund development plan? Identify your most appropriate funding sources for your organization. Identify the most appropriate funding activities for your organization. Consider hiring a fundraising professional or grant writer. Consider replacing funding required for more staff with volunteers. And finally, diversify your funding sources to improve financial sustainability. Okay, Marina, let's go with our last and final poll question.
Great. So everybody, our board members have the necessary financial skills to ensure we are managing our finances well. How much do you agree with this statement or disagree with this statement? And go ahead and choose an option on the screen. We have strongly agree, somewhat agree, neither agree or disagree, somewhat disagree, or strongly disagree. And I think we've got just about everybody here, so let's take a look. We've got 22% strongly agree and 38% somewhat agree, so some good numbers there. 10% are neutral, 22% somewhat disagree, and 8% strongly disagree.
Okay, well that's good to hear. More organizations than not think they're in pretty good shape on the financial management side, so that's great to hear. Okay, so we've talked about our first two keys, a clear financial strategy, and a plan for generating income. Now, both of those keys were primarily about planning to ensure that you're allocating your available funds to maximize your impact and to ensure that you can raise enough money to achieve your mission and stay financially sustainable. Now we're going to talk about the third key, a robust financial budgeting and reporting system. And the problem we're trying to solve here is that many organizations struggle to get accurate, meaningful financial reports that allow their boards to govern effectively and manage the finances of the organization. Also, many funders get reports during the year that are not as accurate as they should be. They're often surprised at year-end when the auditor makes large corrections to the financial statements. And no one likes surprises because they reduce trust and credibility. So let's talk about building a robust financial budgeting and reporting system. Now, once the budget, which is really our expectations about how we will receive and spend our money in the year, has been set, the board becomes responsible for ensuring that the ship is on course and the organization is on track and on budget. So all organizations need a system of financial reporting that allows the board to measure and manage actual performance compared to the budget as the year progresses. Kind of like a doctor or nurse regularly taking the pulse of the patient, directors must continue to steer the ship and make course corrections as required. And just like in healthcare, the accuracy of the tools you use to take periodic measurements is critically important. If you have confidence in the heart rate monitor and the skills of the doctor or nurse during the measuring, you can rely on the measurement and take appropriate action. But what if you didn't trust the results? If you couldn't rely on the results, you'd be at a loss to know when and how to act. The same is true in measuring and monitoring ongoing organizational performance. If you have a weak system in place, directors and funders lack the confidence in the reports they receive, and as a result, the reports aren't of much value. For organizations that have a robust budgeting and reporting system in place, there's no such concern. Directors and funders learn to have confidence in the reporting, and they trust the results. This gives them the ability to act and react with confidence. Regular, accurate, and complete reporting is the key to financial confidence and credibility in any organization. So what does a robust financial budgeting and reporting system look like for small to mid-sized nonprofit organizations? A robust budgeting and reporting system includes appropriately skilled people, appropriate software that fits the needs of your organization, financial management processes and procedures designed to maximize efficiency and effectiveness, and a reporting framework that meets the specific needs of your organization. The financial management and reporting needs of a nonprofit organization are as varied and unique as they are. Taking an infrastructure that works in one organization and trying to use it in a different organization would unlikely be very successful. Each organization needs a system designed and creative with its specific needs in mind. So let's take a look at each of these four components. One of the main keys to a robust financial budgeting and reporting system are skilled people with clearly documented roles and responsibilities. In the best-run organizations, there are people who between them take on the responsibilities of all of the positions on this slide. Now, if you're a smaller organization, you may have fewer positions in your organization, but all of the roles still need to get done in every organization. Note the two positions highlighted in white, controller and CFO. These are typically the two missing positions in most small to mid-sized organizations. And this is typically why organizations struggle with accurate and efficient financial reporting and internal controls. The board members and officers like the treasurer are typically volunteer positions. All of the other positions above are typically performed by paid staff, and there are good reasons for this. You typically don't want a professional accountant doing your bookkeeping. They'll quickly get bored, and you may have high turnover if you expect a professional accountant to do your bookkeeping on an ongoing basis. We have a free financial management roles and responsibilities guide available on the homepage of our website if you're interested, that gives an overview of the roles and responsibilities for each of these positions. Anyway, let's quickly go through the primary roles and responsibilities for each position to give you a sense of what's required from a best practice perspective. So we'll start with the bookkeeper. The bookkeeper is primarily responsible for data entry into bookkeeping and accounting software, payroll and sales taxes, maintaining financial books and records, issuing approved donation receipts, creating invoices and collecting money from customers, and paying bills. Treasurer typically has a relatively limited set of responsibilities, and these are to ensure that the board meets its financial fiduciary responsibilities. The treasurer develops financial literacy among board members, educates and informs board members, and interprets financial reports to ensure that the board actually understands what they're reading. And the treasurer also facilitates strategic thinking at the board level and reviews all reports prior to distribution. Now, in many smaller organizations, your treasurer is doing your bookkeeping, and that's fine, but in a few minutes we'll talk about some issues you may want to consider if that's the situation you're in. Now, with board responsibilities, the board's responsible for visioning and planning, reviewing and improving the strategy, the operating plans and budgets, monitoring and control, ensuring the organization is achieving its mission and is on time and on budget, and the protection of assets and reputations, and approving financial management policies and procedures to ensure appropriate internal controls. Now, the two missing positions that I talked about were the controller and the chief financial officer. And these roles are typically filled by professional accountants. The controller is generally the person responsible for the accuracy and completeness of the reporting system. They design the budgeting and reporting system, and they review the work of the bookkeeper for accuracy and completeness to make sure that the board and funders are getting good quality information. The CFO typically prepares a risk management plan and designs appropriate internal controls to protect the assets and reputations of the organization and its directors. So if you're a small organization and you only have a bookkeeper and treasurer, you probably want the treasurer to be a professional accountant. Bookkeepers don't often have the skills to perform the roles of controllers and CFOs. These really require a professional accountant. So if you're going to use your treasurer to take on any of the normally paid staff positions, get him or her to take over the roles of controller and CFO. They, more than likely, if they're a professional accountant, they have the capabilities, and this will be more interesting to them than if you make them do your bookkeeping. And as the organization grows, however, you'll want to consider outsourcing these positions, maybe on a part-time basis, because the roles can become quite demanding and can cause otherwise great treasurers to leave more frequently than you'd like. Now, speaking of professional accountants as treasurers, for those organizations that don't have one, and this is a question I get probably more often than any other, where can I find a professional accountant to be our treasurer? Well, these three or four sites are a good starting point. First of all, Charity Village, who's sponsoring today's webinar. Charity Village allows you to post positions for free, volunteer positions for free. Great for finding treasurers and even regular board members. The Chartered Professional Accountants of BC offers free position postings for nonprofit organizations and charities on their website, which is available to all of the CPAs in BC. And check out the frequently asked questions for posting volunteer positions. Go Volunteer also offers postings for volunteer positions, including treasurers. In order to post, you do need to be a member, so there's a cost involved. I think an individual can join for around $50, and I think organizations can join for around $100. Also, if you have an accountant that prepares your annual financial statements and tax returns or performs an audit or review engagement, ask them if they know of anyone that might be interested. Accounting firms often have staff members who are looking for opportunities to work with nonprofit organizations to expand their networks. So for all of those of you that don't have professional accountants as treasurers, here's a great starting point if you're interested in getting one. Okay, so now that we have the appropriately skilled people in place, we need to make sure that we create the tools that we need to measure and monitor our ongoing financial results. And there are two important budgets that every organization, regardless of size, should prepare. The first is a revenue and expense budget. This budget summarizes the estimated revenues and expenses of the organization and allocates them to the periods when the revenues and expenses will be incurred, regardless of when cash changes hands. They're usually prepared on an accrual basis, which essentially means that the revenues earned or the expenses incurred, that revenue is recognized when the revenue is earned and when the expense is incurred. This budget tells you what you can afford to spend as an organization. The second is a cash flow budget. This budget summarizes the estimated revenues and expenses of the organization and allocates them to the periods when cash is expected to change hands. It's usually pretty straightforward to convert the revenue and expense budget into a cash flow budget, and there are good tools freely available on the internet to do this. This budget shows you when you can pay your expenses and whether or not you may need to take out a loan or if there is a mismatch between when your cash comes in and when it goes out. The two budgets are similar, but they answer completely different questions, so most organizations need both. Now, once the budgets are prepared, you typically enter them into your accounting software. So you enter them into QuickBooks or Sage 50 or whatever software you're using. And as you track and complete your monthly financial results, what you actually earned and spent, You can then print off actual compared to budget reports that will show you how well your organization is doing financially compared with the expectations that were set in your budget. And these are the primary financial budgeting processes that all organizations should follow. Budget compared to actual reports are probably the most useful financial report that board members should get, at least on a quarterly basis. Now, we did a poll earlier that showed that I think most people were using QuickBooks. And there is other software available, but generally speaking, about 70% of the small to mid-sized nonprofits probably use either QuickBooks or Sage 50 or one of their online versions. The desktop versions are around $300 to $500 per year, and the online versions are a little less expensive. And there's usually an extra $200 or $300 for payroll functionality. About 25% of people nationally are still using Excel. But Excel is still prone to errors, and except for the very smallest organizations, really isn't a good choice. If you can move up to QuickBooks or Sage 50, you probably should. Xero is also available. It's an online system, and some people use it, but it doesn't really handle Canadian two-level sales tax as well, so it requires a little bit of expertise to use and get the right results for sales taxes. And to move up to the next level, like a mid-market solution, probably requires at least a $5,000 to $10,000 initial investment and significantly higher annual costs. So if you're looking at QuickBooks or Sage 50, interestingly, they're actually very different programs. They do most of the same things. QuickBooks generally excels at data entry and reconciliations. You can download banking and credit card information from your bank, which significantly reduces data entry. I think it's easier to use from a budgeting and reporting point of view, and the reporting that is available is much more flexible out of the box. But QuickBooks doesn't do fund accounting 100%. It'll allow you to track individual funds on your profit and loss statement, but not really effectively on your balance sheet. Sage 50, on the other hand, does full fund accounting, and if your organization requires that, certainly true of most foundations, for example. Sage 50 does full fund accounting on both the balance sheet and the profit and loss statement. And if you are willing to invest a little more, it has an incredible intelligence report writer that allows you to get pretty much any information that's stored in the system out in pretty much any format you want. It generally requires you to have a programmer to do some of the work, but you can access amazing information with a little more investment. But Sage only offers manual data entry, and its stock reporting isn't as versatile as that found in QuickBooks. Now, making the right choice here is really important. The programs are very different, and if you use the wrong one for your organization, you could be spending hundreds or even thousands of dollars a year more than you really need to. So get some professional advice from someone who really knows programs, and hint, most bookkeepers and accountants don't really know the differences between these two programs, but there are some good ones out there who do. There are significant differences between the online and desktop software offered by each of QuickBooks and Sage 50, and unless you have a significant reason for going to another provider, you're generally going to be pretty well served with either the QuickBooks or the Sage platforms. There are also significant differences between the online solutions. So again, make sure you get professional advice about which would be best for your organization. Generally speaking, the desktop versions are full-featured, they're optimized for high-speed data entry. If you need remote access, you can have them hosted, but they're generally a little bit more expensive than the online versions. The online versions, on the other hand, are typically light on features. They don't have all the full functionality that the desktop versions do. The biggest problem we found with the online versions now is they just require too many mouse clicks. And data entry, if you've got high volumes of data entry, they take, well, significantly more time. If you've got very light data entry, that's not a problem. They're typically easier to share online because you can provide multiple people with access, and they are a little less expensive. But don't make the mistake of just jumping to an online version without making sure that you don't need some of the features in the desktop version. Okay, so financial reporting is all about summarization. If I gave you a listing of all the individual financial transactions without any attempt to organize them and summarize them, it would be a little use to you. So the way we choose to summarize those transactions can have a significant impact on their information value. And we usually start by categorizing transactions into a chart of accounts like salaries, office supplies, or rent. And you've all seen this before on a profit and loss or income statement. And this is a great starting point for organizations that only have one project or one funder. However, as organizations start to take on more projects and more funders, there's often a need to summarize the transactions by program or project and by funder and fund. This allows us to run reports for any particular program or project or funder and fund and only see the transactions related to that program or project or that funder and fund. And I have a couple of examples on the following page. So here's one report with all of the expenses summarized by GL account on the left, but also summarized by project. So there's a different column for each program or project and one for admin expenses as well. So if you were just running a normal income statement, all you would see is the total column on the right, on the far right. But using this kind of reporting where we allocate the expenses by project, you can see that you actually get 4 separate income statements that you can use to track for your board how much revenue you had on each project and how many expenses you had on each project. Same if you're trying to track your funding, trying to track your revenues and expenses by funder. So here's one with all of the expenses summarized by GL account on the left, but also summarized by funder. There's a different column for each funder and one for admin expenses as well. Now both QuickBooks and Sage 50 allow this kind of multifaceted expense classification, but few organizations use that functionality. Instead, they often duplicate their bookkeeping in Excel where they track it multiple ways, and this is often time-consuming and prone to errors. Anyway, setting up a reporting system that makes it easy to get the details summarized just about any way you want them needs to be done at the beginning of a fiscal year. Otherwise, it can be a huge amount of work to go in and reallocate the transactions after the fact. Now, let's talk about reporting. And this is an example of a reporting schedule for an organization that has the following positions: a bookkeeper, project leads, a program manager, an executive director, a finance committee, and a board. If your organization's smaller, and many of yours are, you can reduce the number of steps, but it's still a really good practice to have a reporting schedule that the bookkeeper and the board agree on so that everyone's on the same page with respect to who gets which reports and how often they get them. And here, same as the previous slide, this is a reporting timeline, and it's from an organization with multiple people who are involved in the review and reporting process. If your organization's smaller, you can reduce the number of steps, but again, it's a good practice to have a reporting timeline that the bookkeeper and the board agree on, so everyone's on the same page with respect to the timing of reports. And it's also agree on who's going to be responsible for reviewing the reports before they go out to board members and funders. We generally recommend, at a minimum, the treasurer all approve internal and external financial reports before they're distributed to anyone. And if you do have a controller or CFO, they should be reviewing them too. Okay, so here's our quick checklist with respect to a robust financial budgeting and reporting system. Do your people have the financial expertise and training they need? Do you have a professional accountant in your treasurer role? Do you have a part-time internal professional accountant? Are you using the right software for your organization's needs? Do you prepare an annual budget and cash flow projection? And are your board and your funders getting the information they need to make financial decisions? Okay, so that's our first 3 steps. The final key to good management and financial success is an accountable internal environment. The problem that we're trying to solve here is that many organizations, and I'm going to say possibly over 40%, are impacted by employee fraud, theft, and embezzlement each year. Estimated average losses are 5 to 7% of revenue across the sector. Many organizations are also not in compliance with established CRA activity reporting and management practices, leaving the organization and its directors at risk. And did you know that if you lose your charitable status, if you're a registered charity, for example, by not filing appropriate returns on time, there's an immediate 100% tax. You can either donate 100% of all of your assets to another charity, or you can give them to the CRA. In this case, the CRA walks softly in the nonprofit sector and charity sector, but they really do carry a big stick. So this section is really all about asset and reputation protection, both for the organization itself and for its directors. Funders and donors want to work with organizations who are going to take every possible precaution to ensure that their funds are never lost or stolen and that they're spent effectively and only on appropriate expenses. According to one recent study of funder behavior, funders' primary fear is that their funds will be wasted. You need to be able to demonstrate to board members and funders that you have appropriate internal controls in place to protect your assets and your reputations. And many people don't know that if an organization doesn't make its payroll remittances on time or remit its GST payments, the CRA can come after the directors personally. So most board members and staff of nonprofit organizations have no idea how prevalent employee theft, fraud, and embezzlement is. According to a CGA Canada survey in 2011, 26% of small and medium-sized enterprises, including both for-profit and not-for-profit, surveyed, reporting to have experienced at least one significant incidence of occupational fraud in the last 12 months. The number was 37% in BC, and we think that the numbers for not-for-profits are likely significantly higher due to generally lower levels of financial expertise and fewer internal controls compared to other for-profit organizations. Again, as we mentioned, best estimate of average losses in the nonprofit sector are 5 to 7% of all sector revenue. So this is a serious issue and goes to show how important having appropriate internal controls can be. We usually show a number of slides of news stories from local papers with examples of all the stories reporting employee theft, fraud, and embezzlement. But we don't have time for that today. Suffice it to say that our file of these stories would scare most directors. And these things happen in organizations like yours on a frequent basis, and most often by your most trusted staff and directors. I had this experience. I was on a board a number of years ago, and that particular organization had over 50% of its annual revenue taken in 1 year because we trusted the people and we couldn't imagine that there would ever be a problem. Now, we were lucky. We ended up getting the money back, but it took over 6 months and we were very lucky. Most organizations don't get their money back. So let's talk about financial risks. First, there's the risk of lack of impact and non-achievement of mission. Funders won't fund for very long if they have reason to think that their funds aren't being spent very effectively. Other reasons for lack of impact can be failure to raise enough funds to fund programs or failure to raise enough funds to maintain or grow organizational capacity. Funders also get seriously bent if they're concerned about inadequate protection or inappropriate use. Bookkeeping and accounting errors are tough to recover from because they make funders lose confidence. And remember what we said about financial success results? Financial success results from reducing risk and building trust and credibility. Now, all organizations, all incorporated not-for-profit organizations, are required to file a T2 corporate income tax return every year. They may also be required to file a T1044 nonprofit information return if they meet one of several asset and revenue tests. And registered charities are required to file a T3010 each year, and that's a registered charity information return. And they're also required to abide by strict rules around issuing donation receipts, maintaining appropriate books and records, and tracking fundraising costs. And there are also very specific rules for not-for-profits and charities around earning business income. And given that 45% of income generated from our sector is from earned income, this is potentially a big risk for many organizations. And unless you have appropriate financial controls in place to ensure compliance with the CRA and ensure compliance with funder expectations, you could be risking the reputations of both your organization and its directors. So what kind of internal controls should most organizations have? Well, here's a short list of the types of internal controls that most organizations, regardless of size, should have in place. It should have documented financial management roles and responsibilities. So job or position descriptions, committee terms of reference if you have committees. Documented financial performance improvement processes. Performance planning and evaluation, professional development, training plans, especially for financial management skills, and documented financial management policies and procedures. Now we've prepared a checklist of basic financial management internal controls for nonprofit organizations and charities. There are about 5 to 10 individual policies under each of these headings. Now some may not apply to your organization, but many will. It's worth flipping through it to identify the policies that you may be missing and that you should consider adding at your organization. This is one that you can download from our site. The details are on the final slide coming up in a couple of minutes. Now, for building capacity for financial management and accountability, there's absolutely nothing better than documenting, everything. Job descriptions for staff, terms of reference for officers and financial committees, policies and procedures, internal controls, coming up with a board calendar, employment agreements, training materials, director development materials, a great chart of accounts, internal financial statement format, and budget and cash flow formats. And it's a struggle in every single organization. It's hard to take time away from your programs and serving the people that you serve and to try and document all of these things. But ultimately, the documentation is so important. Yeah, I can't stress it enough. The more you can document, the more you build your internal capacity, and the less you lose when people leave if you have turnover. So it's never urgent, but it's probably one of the most important things organizations can do to achieve financial success. And here's our final checklist. So now that we've hopefully succeeded in scaring you just enough to go back to your organization and start working on your financial internal controls, here's a quick checklist for an accountable internal environment. So prepare or review a financial risk management plan. Make sure you've got documented financial roles and responsibilities. Even if it's just a volunteer working board, you want to make sure that everybody's clear about who has the appropriate roles and responsibilities. You want to have a documented performance improvement plan and think about the training that board members may need or that your bookkeeper may need or your treasurer may need in order to be able to look after the assets of your organization. And documented financial policies and procedures and internal controls. So before we finish off, I just want to let you know about a new report that just came out last month in the UK. The Chartered Accountants in the UK did a study and concluded that there's a clear linkage between investing in the financial function and mission achievement. And I quote from their study, "The minimization of the finance function in the not-for-profit sector for reasons related to capacity, funding, staff, and management skill sets, and even culture, ultimately reduces the organization's ability to fulfill its social mission. The two are closely tied, and good financial management enables and preserves the social function." And they concluded that most organizations currently underinvest in their financial function. So what can we learn from that? Well, we can learn that if you want to achieve your mission as efficiently and effectively as possible, start investing in your financial function. Hire more experienced people like part-time fundraisers and accountants. Train up your existing board and staff for better financial management. It'll improve your capacity to achieve your mission. Now, just a reminder, we said at the beginning of this that the underlying philosophy of all of our recommendations today are to build trust and reduce risk. And anything you can do to improve your financial management will help your organization achieve more financial success. If you can figure out how to demonstrate that you're a low-risk organization for people to donate to and fund, and that you've got trust around your internal financial reporting and ability to deliver on your mission, you win. That's where the financial success comes from. So that's all I have for today. Feel free to download the two resources that I mentioned during the presentation, the Financial Management Roles and Responsibilities Guide and the Checklist for Basic Financial Management Internal Controls for Small to Mid-Size Nonprofit Organizations and Charities. And now, Marina, I guess we have time for some questions.
Yes, thank you so much, Gordon. This was a jam-packed presentation. I recognize that we are coming up on the hour. So for those of you that can't stay for the Q&A, not to worry, you'll get the full recording of the session, including the Q&A, tomorrow morning by email. So that's no problem if you need to duck out now. So we just have time for, I think, a few questions, Gordon. Let's start off with, how do we incorporate ongoing operations in our strategic plan and our operating plan?
Oh yeah, so I didn't mention this in the webinar, but we usually have a separate sort of strategic goal that we don't publish, but we keep internally on all of our ongoing operations. We do typically, the action plans, the operating plan, and the strategy are typically related to changes that we want to make, to things we want to improve, to new services we want to add. So they don't relate to the ongoing operations. The ongoing operations, for the most part, the things that need to get done every year, that stay the same every year, that don't change, we keep as a separate part of the plan, and we'll often document it as a separate work plan and have it so it doesn't actually show up in the strategic plan or the operating plan. It's actually a separate work plan that we keep and maintain over time.
Great. So let's move on to the second part, the fundraising aspect. You've suggested hiring a part-time professional fundraiser and also a part-time professional accountant. Now, a lot of our organizations on the call today are very small and just can't afford those options. Is there another option they can consider or some tips that you can provide?
Well, absolutely. And the first thing for most organizations to consider is whether or not they can find people that have those skill sets to volunteer time either on their board. So, for example, a professional accountant could become your treasurer, and it sounds like we've got, I can't remember the numbers, but it was a fairly high percentage that currently have professional accountants as the treasurer. And for those organizations that don't have one, you know what? There's lots of professional accountants out there that would be happy to work with your organization. Now, often with smaller organizations, you may get younger people that are trying to build their career, but those folks, have been at school for a number of years in financial management, and for smaller organizations, they're actually an ideal fit. So don't hesitate to reach out to accountants, check out those, and again, it's not something you typically voluntary basis. Fundraisers are a little more difficult to get on a voluntary basis, but you know what? We hired one recently for one of the charities that I'm involved with that I think for sort of a one-time contract to come in and help us identify who our most appropriate funders were and what kind of fundraising activities we should participate in. I think it cost us maybe $1,000 or $2,000, so it wasn't hugely expensive. And now that we've got the plan, and now that we're clear about how effectively we can go forward, now we can implement that plan as an organization, and we don't need the ongoing support. So try and get it as a volunteer. Try and get these services as volunteer if you can. And if you can't, well, either if you've got specific things that you want to fix, you can often get somebody to do it on contract for a relatively small and fair amount.
Wonderful. Now let's move on to bookkeeping. Someone asks, all of our bookkeeping has historically been done on a volunteer basis by our treasurer. We really can't afford to hire a bookkeeper. Is this a problem?
Well, I'd have to say it's absolutely a problem, Marina, and here's the challenge. If the treasurer and the bookkeeper are the same person, there's nobody reviewing the books to make sure that funds aren't going missing. And as much as we would all love to be able to trust, as I think my experience demonstrated, it makes it very easy if there's nobody with more financial expertise than the bookkeeper reviewing their work to make sure that funds aren't going missing. And again, it happens in a surprising number of organizations. And so it's really critical, I think, to have somebody do the bookkeeping and somebody with more financial knowledge than the bookkeeper reviewing the work to make sure that it's accurate and complete, and to make sure that funds aren't getting misappropriated. There was well, I can't even begin to tell you the number of examples we have, particularly in small organizations where there's no internal controls, how often funds, and often significant funds, go missing. It puts many organizations out of business. So while it's certainly efficient to have your treasurer do the bookkeeping, you really want to differentiate the person who's going to be doing the work from somebody else performing an overview role that can make sure that nobody's absconding with your funds.
That certainly makes a lot of sense. Okay, so let's wrap up with this final question. Is there a template we can use to draft our financial management policies and procedures?
Yeah, you know, Marina, I've spent hours scouring the internet to try and find one, and the conclusion I've come to is that nobody's designed sort of a template that could be useful for all organizations, just because organizations are so different. I've reviewed, probably 20 or 30 different financial management policy manuals or listings of financial policies, and I find that for every organization they're so different. Actually, you can go online and you can do searches today, and if you do a search for financial management policies and procedures, you'll pull up financial policies and procedures for universities, for colleges, for government organizations, for very large organizations, which make up a very minuscule part of all the organizations in Canada. Most of the organizations are smaller, and the financial internal controls that are relevant for the big organizations just don't apply to the smaller organizations. So unfortunately, it's a kind of thing that you really have to start from scratch for your organization. Now we've prepared, just so that organizations can get a sense of the types of internal controls they should be considering, we've prepared that checklist for basic financial management internal controls for small to mid-sized nonprofits and charities. It doesn't have the full detailed policies, but at least it has the types of things that organizations should be considering so that they can draft their own. That's unfortunately, that's the best. We weren't able to find one on the internet, so we came up with one ourselves.
Well, that's great. Thank you, Gordon. I think we're going to call it there in terms of questions, because I am conscious of our time today. So I just want to thank you again, Gordon. This was a great presentation, lots of information. And I'd like to just say before we sign off that we will be following up with all of our attendees by email with the webinar recording and the presentation slides. So you will get that likely tomorrow morning. We'll also include a link to a very short survey. If you can take 5 minutes to fill that out, it's super helpful for us. It helps us to further refine our webinar content and our delivery. You will have an opportunity there to let us know if there's any topics you'd like to see covered in a future session. So go ahead and weigh in on that question. I'd like to thank all of you again for joining us today. Gordon, thank you for a great presentation, and I hope all of you have a wonderful rest of your day.
Marina, thank you very much.